Welcome back. You're watching Money, Money, Money. 1 year and counting. That's how much advice we've given out so far, but we're not done just yet. Pankaj Matpal of Optima Money Managers and Prakash Diwan of Altamount Capital Management are here with us, joining in to advise the scores of young people who have come down to our studios to join in our celebrations. I hope you're having fun so far, and there are quite a few questions coming in, so let's go straight away to the question that you have.
Hello sir, my name is Bhavish. Sir, I want to ask you that as I have taken an education loan for my MBA program, so as and when I get for the job, so what should I do? What should I pay for my loan or start investing in the market?
Always you should invest after you are debt free. You should repay your loan. That is a good idea. But because you also get benefit of that interest what you pay on your education loan, you can claim deduction in income tax. So having some loan as outstanding is nothing wrong. So you should repay that. Some part of course you have to repay as an EMI, but you should also try to foreclose it as soon as possible. Along with that also invest, because you will have some goal.
Pankaj, on their behalf, I have a question. You've left no space for them to buy their new fancy phones and their tablets and go on vacation.
See, Sumera, I'll tell you one thing. Of course, everybody will have those in mind, but they should understand difference between need and want. If, of course, for your all goals, whatever you have in your mind, you have money, so you should also spend for yourself. But it should not be at the cost of sacrificing your need. Means for your want, you spend it tomorrow. If you need money for something you don't have. So first, you should have money for your contingency. Then, if your family members are dependent on you, you must have life insurance, your health insurance, and then for your goal, whatever it is, whether education goal or for your own marriage, you want to have some money, or for your retirement.
If I could just add to a practical tip that I can share with you, start off a sweep account, which is where money moves from your salary. Move some money into a liquid plan or wherever it goes into, which is out of your account at least. Don't leave money in the bank account. So when you go to the ATM, there shouldn't be much of money there. If there's money in the ATM, you'll pull out more of it. So it's like if you have 100 rupees in your pocket, you cannot spend 110. After a while, you'll realize that it starts building up. Even if it's 500 rupees a month, doesn't matter. The amount doesn't matter. But first day, the day you get a salary, move money out.
Yeah, I have first-hand experience of that. But since you're just getting started, I have one more harsh reality that I want to introduce you to, and which is taxes. So don't forget that. So there's investment, there's savings, there's liabilities, and there's taxes. And you just have to live with it. There's just nothing that can be done about it. All right, who's next?
Hello sir, I'm Ankita. I have a very basic question. What is a stop loss and why it is important before investing?
One is it is very important, especially if you're a trader. It may not make sense if you're a long-term investor, because in the long term you buy a good stock more from a 5-year horizon or 10-year horizon, whatever, so you don't buy it just for the next 2-3 days or a couple of weeks or a month. So it may happen the market is volatile, there are lots of factors which impact it, so prices could move up and down. So if it goes below your purchase price, you don't need to get disheartened, because you know that at the end of 5 years it's going to do well, it's going to be much higher than what you paid for. So don't be bothered about that. But if you're a trader, then you need to be really worried, because you don't have the ability to hold on for a long period of time. Your funds are usually available for a short period of time, and if the price goes down, you'll actually incur a loss. Even if it moves up, you may not be able to bear that, or you may not be able to withstand the timeline. So keep a stop loss which is within reach. So there's always a particular loss that you can bear. So if you start with 1 lakh, you say, I don't mind losing 25,000 out of this. Okay, but I can't afford to lose more than that. So 25,000 becomes your stop loss. You buy a stock, 25% lower is a stop loss. If that gets triggered, you have to pack up. Stop losses are decided more by technicals, by levels at which supports are there in stocks and all. But it's more for a trader. At this point, I don't think you should be worried about it or get too much into it. Look, as an investor, I don't think there's much of a stop loss that you need to be bothered about.
Yeah, but in case you do, then stick to it firmly. All right, who wants to go next? Who has a question?
Hello, sir. My name is Prince. I wanted to ask a question regarding thematic mutual funds. Sir, what do you think thematic mutual fund is a good bet?
See, what happens, mutual fund is a pool of fund. when investors like you and me invest in some scheme, fund managers invest that money in the different asset classes based on the objective of that scheme. If it's an equity scheme, fund manager will invest that money in different company shares. If it is a debt scheme, they will invest in debt securities. So when you invest across all sectors, it is a diversified equity mutual fund. If fund manager decide or scheme's objective is to invest in some particular theme, for example, infrastructure. So infrastructure means what? Like construction, telecommunication, banking, etc., energy. So if it is a thematic fund based on infrastructure, it means your money will be invested in those companies or those sectors stocks only. So what happens if you are investing in a diversified fund? Your risk is spread across all the sectors. But if you are investing in a theme or in a particular sector, it means due to some region, if there is some risk associated with that sector or with those sectors which are in that thematic fund, that will be more risk to that scheme. So that is why if you feel that that particular sector because of some region is going to give you returns better or more than the broader market, then you can choose to invest in that theme or in that sector. Otherwise, to start with, I will advise you to invest in diversified equity mutual fund where you have exposure to all the sectors.
All right, so that's a good point, but we need to take a break on that note. We'll come back in just a bit, and there are lots more questions that we'll be answering when we return. Do stay tuned to Money, Money, Money.